Hey, what's up, everybody? It is Tuesday, May 16th, and going to go over the market recap for what happened today. So, still looking at the S&P 500, looking at the black lines right here. It's just showing that it's still in the support resistance area right there. See that black line, and you see actually when it came down to it, and I didn't put that on. I put this on there earlier today before it even got down here, but look what happened. It hit down there again and went straight back up to it. So now it's looking like it's going to go back up to the top of this level up here if things continue, because we've had 1, 2, 3, 4, 5, 6, 7, 8 days now within this range, and we're just waiting to see which way it's going to break out of. If it breaks out here to the upside, then the 5-way move we're looking for up here is around 41.90. But if it breaks down here, then we're looking for it to go down below the second wave in this potential 5-wave Elliott move, and that would invalidate that one. So yeah, we're just waiting for it. Not much else to say there for it. It's just completely in a range, and it's bouncing off the lows. So we'll look for it to go up here and hit the highs. So there's still, if it does go do that, there's still a good bit of time for it to go ahead and hit that. My keyboard over here. 41, what's this, 41.31, 41.63, yeah, so another 30-point gain. So wouldn't be surprised since it's been doing that. So until it does, we'll just assume it's going to continue and go up there and do that. For the trades for today, this one, there's a 15-minute candle right there. Price broke down, went down and hit the target right away, so nothing can do about that one. And then as far as the 50% trade goes, there's the high for the day. It broke out down right there, came back up, hit the 50%, and completed right there. So S&P 500 was pretty worthless today as far as trade goes. For the Russell 2000, we are looking for a trade setup right here. We can see that there is the real skinny 830 first 15-minute bar right there. Price closed below it, so it's going to the downside. So we're waiting for price to come up here in the 50%. Still hasn't yet, so we are waiting for that to go up there and get hit. Initiate that trade, but I don't take it from that area. If price continues to go up and hits 61.8, I'll take that one, because then the exit moves from the 38 to the 50%, and then it stays right there no matter how high it goes. So that is where I am looking for it right there. For that one. So that is the Russell. Going over to Dow Jones, same sort of situation as the Russell 2000. We are just waiting for price to come back up, hit the 50% line to initiate that, and then if it keeps going higher, we'll get in at the 61.8, and the exit would be the 50%. You can see there's the 815 candle right there, and then price closed below the body of it. Obviously, for this other trade right here, it hit it, I think, yeah, on the second candle right there, so couldn't take that trade today. No big deal. But still looking for the 50% retracement trade to it for it, and that is the Dow Jones. Going over here to oil, there was this one I'm still looking at right here. We're using the opposite way of when price breaks below or closes below the 15-minute candle. Can you take it that way? And right now it's looking like no, but still hasn't gone down, a whole lot for me to say that it's definitely not going to work. But there is one other trade setup. I think I went over this in the live session this morning that I was doing. Some mornings I'm going to try to do like a first opening bell hour-long session, just because that's showing how the setups happen, what I'm looking for, and then leave from there. Sometimes, probably a lot of times it won't be an hour, because to be honest, it gets pretty boring. Just sitting there looking at the charts, waiting for them to develop, but I like to go over my thought process for it. But anyways, one trade that I'm going to start looking at right here, fleshing it out to see if it is going to be something that works, is I'll tell you what, hold on one second. It was, the music was a little loud. I had to turn that off. So anyways, so what I was looking at, I noticed, because I was talking about how a lot of days when price, when it goes, you can use the previous day's high and low, and you can look at the extension levels. And a lot of times when it hits down to this level, you'll get that retracement back up into there. But some days, and it happens most days, but there's some days when it doesn't do that, and the price just goes on and completely obliterates it. Like, let's see, for instance, like kind of like this day, it did get some resistance down to it, and eventually it popped back up. So that wasn't the best example. Let's look for when we have a day, yeah, like this one, for instance, right here. So I look at this day. So we use the low for that day to the high of that day, and then when the market opened that day, it just shot right up. What day was that? That was the open up on Sunday of April, beginning of April. So anyways, so blew past the Fibonacci extension level from the previous day, which typically means if it's going up, that typically means that's a resistance level, and if it's going down, you can look for it to be the support level for it. And price just shot all the way through it, wasn't even going to stop. So what I've noticed is you gotta keep going. When price comes back to it, a lot of the times, see it hit off there perfectly off the 1.414 level, and it got some movement up towards it. So one thing I'm gonna start looking for is that right there, and then if the price keeps going down, hitting the 1.146 level, taking back up to the 1.414. So just some things that I'm going to look at moving forward to see if that would be a valid trade. And then one thing you can do is take it from the top and just keep on drawing down to the bottom. And the 23.6 seems to be a good level to get out for it. So that is just want to explain that what this is right here, because that's what this is, using the high, low, see price blew down through the 1.146 and also the 1.414 level. Went all the way down here and then started coming back. But as you can see, when it hit right up here, I'll zoom in a little bit more. When price hit it, it came back down, and we had a little bit of a pullback for it. And if you do that from the bottom of the move to the top move where it hit, you see it came down and hit the 23.6. So if that is going to be a legitimate trade right there, then that would be the first exit, 23.6. But then if price comes up here and hits the 1.414 without hitting the 23.6, then you'd move the exit to the 1.414 level for it. So this would be the first move. If price continues to go up and hits the 1.416, then the second exit would be right there for it. So something I'm going to look at because it does seem very intriguing, and having other trades is obviously very, very beneficial from what we're looking at. But I'm going to delete that because that's going to look confusing. And so then just looking for this one to see if you can take the 50% the other way based upon the previous day's move. Not sure you can be able to do that, but that's why you look at it right there. But anyways, that was oil. Not a lot to say about oil. Going into the Nasdaq, we're still looking for a big retracement coming down the Nasdaq down here into about 12,845-ish, assuming this high holds. If price keeps going up, we're obviously in a trend right here. You can take probably, that's probably not the closest one. Probably something like that. And then going along that side, it's kind of that's probably more accurate right there. So you have an ascending triangle right there. You got a wedge coming up right there. So typically what happens is when you're getting like this, price is going to start just going closer back and forth, like closer. Well, I won't even do that. But anyways, it just goes closer, back and forth. And then once it gets too much, then you have a big breakdown for it from that move right there. So that's little technical analysis by the books of what they say. Is when it gets to the pinch point up here, you get an explosion down here to the downside. So we'll look for to the downside whenever this thing breaks out of it down here to about 12,842. But until then, it looks like it could squeeze out a little bit more here to the upside in the next couple of days. And yep, that's going to be the market review for today. Bitcoin still just flattering around. Not much to say about Bitcoin right there. Let's see if we use the previous days high low. Look at that, hit right up there really nicely and got in there, and that was the resistance level. So let's see if there is a day where Bitcoin just blew through the previous day's highs and lows. Okay, yeah, so that one did. So came down here, and then look at this. Wow, pretty close to hitting it. Didn't quite hit it, but probably good enough to say it did. But anyways, came pretty close to hitting it, and then use it as the resistance. So maybe it does work. Looks pretty interesting. Anyways, that's all for today. Have a good one. Thanks, bye.